This is the Retirement Solution Podcast with financial advisor Jon Hicks, founder of J. Hagan Capital.
If you, like so many, are on the hunt for retirement income options, those options are on the move again, and you got to chase them. Fortunately, you don't have to do it by yourself. I'm Heather Branch, here with Jon Hicks, founder of J. Hagan Capital, financial advisor, retirement planner. RetirementSolutionShow.com is our website and where you can go to start the conversation with Jon and his team. We also have links posted in the show notes. We're on a hamster wheel, Jon. It's the rat race.
Aren't we always? Dude, it is.
We're like one of those little mouse maze puzzle things where the little mice are all running around the little mazes trying to find the piece of cheese. That's what it really is. I just figured it out. The analogy.
It always feels that way. It always feels that way. You got to keep up with the Joneses. You got to find the cheese, in the maze, all that stuff. It's always that way.
Somebody moves your cheese. What's the name of that book? Who Moved My Cheese?
Who Moved My Cheese?
Yeah.
I'll tell you who did. The government did. The government moves my cheese. Every year they move my cheese. They take my cheese and they put it in their pockets.
What flavor is the cheese? Is it cheddar? Is it Swiss?
Limburger. That's what I give to them.
You're all
the pungent, terrible, stinky stuff. They can have all that. Is that
the stinky blue? Got it.
That's right. They can have it.
As investors, as savers, looking to find ways to generate income for ourselves in retirement, it has been a real. They keep moving the cheese. It feels as of the last few years. So, as we've seen interest rates go up, as they've done, billions of dollars, investors started putting more into CDs and money markets.
Sure.
Then as millions of boomers started to look for more income in retirement because less and less of us have pensions, there was also a record number of annuities being sold each month.
Sure.
Now, the Wall Street Journal published an article talking about billions of dollars that are being poured into dividend-paying stocks. So let's talk about, obviously the appeal of dividend-paying stocks is the dividends that they pay.
Of course.
So
absolutely.
Let's talk about how you're using them, but also just this overall, again, this maze that we're constantly navigating our way through in effort to find income sources, protected income sources for ourselves in our retirement.
Yeah. So, if you think about it for a quick second, when you look at 2022, that was the biggest year in a long time of people realizing bonds may not be all that great.
Yeah.
Now, I have in my office for years and years and years and years showed people that bonds, when they're used as a hedge against market volatility, can be somewhat productive. They can be decent. But when you look at bond funds, guys out there, when you look at bond funds, they've averaged like less than 2% a year for the last decade. Even the best ones, even the ones from Vanguard or Fidelity or Schwab, that is not very good. That barely beats, in some situations, CD rates and money markets and fixed annuities. Now, having said that, the reason that people did it is because that's what they were advised to do. So in our office, we've always had bond alternatives that are much more stable, much more secure. And many times we would use dividend paying stocks as a kind of a backstop, if you will. It's not risk free. We all understand that. Because any given day, and people around here are aware of this, UPS. UPS for a long time had a really good dividend. People held on to UPS stock because of that dividend. Well, if you look in the last 5 years, UPS stock is down over 50%. That is a kick in the face. So when you think about that, it's like, I want a great dividend paying stock. Well, you still have to understand you can lose money in that. You could absolutely lose money. UPS has lost 50% of its value to the point where that 2.5% to 3% dividend now is almost 8%. And now they're talking about potentially cutting that dividend, right? Okay. So the biggest thing to understand is I think that dividends are great as an income producing type asset. There are other better ones, in my opinion. If you don't have a pension, annuities could be fine. You just have to understand, what is it for? Is it complicated? Does it have fees? All these things that make annuities so terrible to some people are okay for others, again, as a bond alternative. But it just really depends on what you're looking for. So one of the greatest things that have happened over the course of the last several years, in my opinion, is there are so many other income plays that can also be a volatility buffer. So some of these things are really literally called buffered ETFs, which means that they have some kind of a protection in there, right? But they don't have to use bonds. Why? Because bonds lost a fortune in 2022. Why? Because interest rates moved up. Not complicated, but it stinks. So income producing buffered funds or barrier funds can be very attractive for some people. Banks produce what they call structured notes or principal protected notes. Now, like that name suggests, as long as that bank stays in business and doesn't go under, principal protected note is guaranteed against loss by that bank. Not by the FDIC often, not by the government, but by that bank. So if it's a good quality bank, those can be very attractive alternatives to bonds. Now, why are we talking about that? Because frankly, guys, I think bonds are going to continue to stink in the long run. Plus, it's also debt. When we look at how much debt we have as a country, how much corporate debt is out there in the world, I don't like the idea that if that company doesn't make its payment, you could potentially lose your principal. I don't like that. So the idea of dividend stocks or dividend paying things is really good. Another thing that's come out more recently is option premium. Now, some of these funds out there, and you have to be very careful, because some of these that are paying like 10, 11, 12% dividends, they can also lose tremendous amounts. Like, for instance, this year, between March and May, I believe there were many ETFs out there, many exchange traded funds, many investments that were producing 7, 8, 9, 10, 11% of income. Okay. But when the market got kicked in the face, they went down 25, 30, 40% for that period of time. So that could be very devastating, right? Yeah. So the main thing we want to do is we want to understand, how can we diversify our income sources, right? How can we be certain that we can produce income that we can spend? That's why people love pensions. That's why people like getting that Social Security check. Yeah. It's consistent. Yeah. It's why people that have annuities that aren't against them, why they like that, because they're going to have an income check that comes in all the time. Now, having said that, I think dividends are better than most other options for some people, because it typically has a built-in inflationary hedge, because you're going to get that payment, hopefully that 2 or 3 or 4% income payment. But at the same time, over time, if we expect the market to rise, you should get a little bit of appreciation in that stock value, right? One of the things that people don't use anymore are preferred stocks. I think preferred stocks are great. Why? Because they're paying 4, 5, 6% right now. Good quality companies often offer these, not as many as there used to be. And the main thing is they're usually much more, they're a lot more stable than the overall stock market. So these are all things we need to consider. So, when you're thinking about developing your income plan, which everyone needs to have, at J. Hagan Capital, we ensure that everyone has a proper income plan. We don't want 1 or 2 income sources. We don't just want Social Security and then pulling money from our retirement accounts. That's a terrible plan. We want 3 to 5 completely separate income sources. So important, right? Because we've already seen the writing on the wall. Social Security may be reduced. We may not have a choice in that. There may be nothing we can do. So if our Social Security income goes down potentially 10 to 25%, we need something to offset that. And that's not me making this up. It's what we've seen written. All of the financial gurus are talking about it. Even the SSA.gov website is basically already told us in writing that unless something major changes, we can all expect less money out of Social Security. I get it. So we have to make sure we have 3 to 5 different income streams. Dividends play a huge part of it. I was looking at it the other day. One of our income dividend portfolios in our office is paying a little bit better than 5.5%, fully diversified, all high quality stuff. And there's some things that pay even more than that. You just want to make sure that you have volatility control. You want to make sure you're doing quality companies that can hopefully withstand if we do have a recessionary environment, right? You want to make sure that they have income that's diversified. 3 big things. Chasing the yield, chasing the highest payout often is a recipe for disaster. You just want to make sure you have quality income that's going to come in. And I think a couple of weeks ago, I was even talking on the show about a dividend aristocrats. These are typically companies that have been around for a very long period of time, and they have a history of increasing their dividend rates over time. They basically say, hey, we've done well for ourselves. We're going to reward our shareholders by giving them a little bit more of our income. I think those are good. Just be careful. The higher they pay, that can be a little bit of a trap. They call a value trap, where you can potentially, just like UPS as an example, it looks like it's paying a good dividend, but you lose 50% of your principal. So these are things to all consider when you're looking at that kind of stuff. Behavior risk is the biggest factor. We have to make sure we can handle the ups and downs, because the income could be a little bit volatile from a dividend paying standpoint. It's not going to be as precise as a pension payment, or a banknote. We want to make sure of that. But behavior risk, this is why I feel that most people, when they're creating an income stream, need to deal with a skilled fiduciary advisor. Be certain that you're aware of all those options out there. If there's something out there that works, we want to be able to consider it, right? That's the whole idea.
Yeah.
And many of us, because we're just not used to this, it's not our standard language. We don't know where to look for it, right?
Well, we've never had to deal with it. Our income has been our paycheck. Now we have to create these different sorts of income streams through income diversification, and the options and opportunities were ones we never even needed to consider.
That's exactly it. So most people just get a W-2. They work for a company and they get their paycheck after the taxes came out. Now we may have to have 3 to 5 different income streams outside of Social Security. So we want to be certain that we're doing the right thing, that it can evolve as with our needs, right? And make sure that there's flexibility, because things could change. Things will change, sometimes on a week-to-week basis. So we just have to be certain that the plan that we create for ourselves, that we can stick with it. That's how we win in the long run.
RetirementSolutionShow.com is our website and where to go to start the conversation with Jon and his team at J. Hagan Capital about building that kind of plan, one that evolves, one that's flexible, one that you can stick with. It seems like that might be a big ask, but at J. Hagan Capital, they are here to simplify the process with and for you. Starting that conversation on our website, we have links that you can click on posted in the show notes. Or again, visit us anytime, RetirementSolutionShow.com.
Thanks for listening to the Retirement Solution Podcast with Jon Hicks. Begin the conversation about your savings plan with Jon and the team at J. Hagan Capital by visiting RetirementSolutionRadio.com. Be sure to listen to Jon's radio show, The Retirement Solution, Saturdays at 8 a.m. and Sundays at 9 a.m. on News Radio 840 WHAS.
J. Hagan Capital Incorporated is not licensed in all 50 states. To find out if J. Hagan Capital Incorporated is licensed in your state, please call 502-690-5635. J. Hagan Capital Incorporated is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. By contacting us, you may be provided with information about insurance and annuity products offered through J. Hagan Capital, LLC, NPN number 188279094.